Hello, welcome to Options Trading Pilot. This is your Chief Trading Pilot, Proforma 24, also known as Guillermo, but just wanted to really put this video out there because I know there's a lot going on in people's minds. So just want to review the markets, want to review what we're thinking and what we think is going on and maybe help you with some of the trades that you have out there. So obviously today was a tough day, right? Across the board, S&P down 2.12%, the Dow down 1.78%. As you can see, there's a lot of red. The VIX really jumped up, but we still had some winners, right? Walmart, Cisco, Coca-Cola, Procter & Gamble, and Verizon did really well on the Dow Jones. And then NEM, MRO did really well with a 4.1% gain. That was a good move. But the surprise is Nvidia, right? Nvidia, as you can see, took a tumble, 7.46% down. Here's what's interesting. If you look at the numbers that they released, they were actually great, right? So the fix is in when you see a tumble like that, and it's very surprising to see Nvidia take such a big fall. Obviously, they're tied with crypto. Crypto looks like Biden's going to do an executive order in order to see what they're going to do with that. But I think all that will end up being very positive in the crypto markets. I always like to use the example of if you're familiar with the Ultimate Fighting Championships. It used to be a brawl, free-for-all, no weight classes, and just everything else. Once they decided to standardize and go with the rule makers, and guess what happened? We ended up having the first owners selling out at a super high price, right? Because then that's when everybody came in. That's the way I see cryptos, right? I see that, yes, we probably will go through some challenges here, but at the same time, it'll be really easy to go back up. So that obviously that's conjecture, that's opinion. Let's go to the market and let's see what we're looking at. So I always like to see the RRG chart. So of the different areas. Let's see, where are we? Right here, view as RRG. If you don't have stock charts, I really recommend it. It's really good to see different things. This is a 1 year weekly, see what is leading. And it's pretty cool because you can animate it, right? You can see how things are moving and see who's leading. But if you don't want to take the time to do that, then of course you just look at the chart. You can see the price change. Oil's way up, natural gas, pharmaceuticals, computer utility index. So overall, we're seeing these are the areas that are doing really well. Notice that gold and silver is climbing, and that has been doing really well. So all in all, the SPX is down here. All in all, it's really just a utility, right? Just to see like kind of, hey, what markets tend to be hot, what is going on. Some of the more interesting things, though, it's like when you look at international markets, that's when we see that maybe we shouldn't just focus on everything, right? Year to date, let's go by percentage change. The Brazilian ETF is really outperforming everything else, right? Everything else is way down. Obviously, the reason why that is because their holdings are a lot of commodities, and commodities are doing really well. And surprisingly, China is doing well, Hong Kong is doing well. So it's interesting to kind of broaden your sphere and see what we're looking at. So let's go to the SPY. The SPY is the key thing that we're looking at. So I mean, it hasn't been easy, right? It has not been easy. I like to use these moving averages, and they haven't really been helpful. The moves have been wide candles, very large moves from one day to another. We have gap ups and gap downs, super tough. So fortunately, if you're studying and if you've been following us for a little bit, then you know that we lighten our trades whenever we see the 513 go down, and then we don't really go heavy. One of the things that is really good to look at, obviously, is when you see a down market, then we want to look at we want to look at what the Fibonacci retracements are. I like using the big candle. Oops, there we go. You can see where it went down. You see that 50% number was hit above on this day right here. What day is that? I guess can't really see it. Save changes, no. But you can see this was hit on February 9th. Let's go back to that. Just so we can talk a little bit more at length. And so what does the Fibonacci do? That's not what I wanted. That's pretty cool though. Let's do undo it. I actually have never used that, but here we go. So you can see, right, that 50% retracement. It filled it twice, but it gave it up. And now we're just heading back down. We may enter this 430 range once again. If you see SPY come down here below that, then we would anticipate further drops. The next drop is over here, 424 or so, right around here. But let's go back just so you can gain a little bit of what do you call that, confidence, and go back to 2020. Custom. Here we go. And so let's go back to 2020. Let's see what that looked like, right? I'm talking about this drop. Let's focus it in a little bit more. Here we go. So we're going to inspect it. We're going to look at our Fibonacci retracements. And notice there isn't a marked downturn here, right? We do get that crossover right here. So I'm just going to use that as a jumping off point, and we go to the bottom. So this over here is similar. This is somewhat a similar point, right? So as you can see, we went over that 50% mark and then we dip down. So once we get that and we break down to 0%, we can anticipate further acceleration down. So just be on the lookout, right? So trade lightly. Maybe those puts are really good to use. The longer terms, you get them out of the money just to keep that inexpensive. I really don't like to play puts, but I did really well in this downturn. This 513 EMA crossover solid. And so, you know what, one of the reasons why we see all this is really so much coming from the cryptocurrencies. Here we go with Bitcoin. Bitcoin, wow, that's a big candle. You know, if you look at these lines, sort of like its market structure, if it goes below here, I mean, we may see more further downside and even come down, visit here 35. So it's not, we're not at a great point right now in the market as far as upside. So anyway, one of the things to focus on though, let's talk macroeconomic figures, because that's way more important. Obviously the Russia issue is weighing the markets. We have a long weekend with a lot of unknowns, so probably a good idea to just stay light, and you can see that happening. So that's one of the key points. The other part that I really like to focus on is really just looking at what the market has been doing, right? The market and not just that, for with the economics as well. Unemployment is at 4%. Yeah, today's report, we had way more jobless claims than we anticipated, but that comes with the territory. Still, we're at 4% unemployment rate, which is technically full employment. The infrastructure bill it's running, so that's a slow burn. So we keep putting money into the economy. Yes, of course, the Federal Reserve needs to increase interest rates, and that means they're pulling the buying systems into what ends up being going into the market buying. Those are $30 billion a month, and that will end at the end of this month. So we're gonna, and you already seeing the market's already reacting to that, even though those buying programs are still going. So given all that, right, the question is, if the treasuries, if the Federal Reserve is pulling $30 billion a month, the question is, are we creating enough wealth to replace that and go above it so that new monies continue to come into the market, right? So new money is what drives the market down, up. And so as far as like big picture, I mean, think about it. Let's pull back a little bit. We had the pandemic. If you drive around town, any town basically, I know here where I am, there's help wanted signs everywhere. There isn't a lack of work. If you like to work hard like I do, then you can have multiple jobs right now. And so I have my main job, my main work, which I love and I do it all day long. And then I have two side jobs that are related to my main job. So basically, and you know, I have people that call me, can you help me with this? Can you help me with that? And then of course, like you charge a little bit for that. But in the end, the market is hot. I mean, as far as work is hot, you can get work. So how does that relate to the market? Well, a lot of people complain is like, hey man, those two are not correlated. I was like, well, yeah, sure. In the short term, you're 100% right. But in the long term, right? If people are working, they're creating wealth. Yeah, inflation's really high. So if inflation's high and people are working, their wages will have to go up. A good friend of mine opening a restaurant in Kentucky. He says he does wedding catering. He is now had to raise his food rates to about 40% up. He has to deal with paying labor and he has to deal with paying rising food prices. So we see that going up. And so if that's going up, wages are going up, and obviously the catch there is the lag time between those two things happening. And yes, I'm being optimistic. I think that we'll get this inflation under control. I think that this really temporary volatility is going to subside. So in the end, I'm bullish for the year. It could be that I'm wrong, right? But that's the thing. It's like we have to go with the information we have right now. We have a great risk of experiencing a further downturns in the market, and so stay light, right? Use puts. Just be real careful in how you're going to trade. Trade tight. And so in the end, after all that, just be ready to pounce. Have money so that you can pounce, right? And so that's generally the idea of what we're going with here at optionstradingpilot.com, is that we are trading really lightly, not putting out as many trades as I normally do. These earnings reports, they have been pretty good for us as far as trading. Obviously, there are some like ChargePoint that really went crazy. We did not do that trade just because it seemed like there could be a really big move. So it's just super interesting that there's I didn't mean ChargePoint. I meant Upstart, UPST. Sorry. You get to the point that you see so many, you get to see so many tickers that you start to confuse them. But in the end, I just want to offer you some confidence, right? So if you're stuck in a bad position right now and you don't want to get out of it, find a way to sell calls on there, or you know, you can buy some puts, but that gets expensive. If you could sell calls and you have that ability, I think it's a good idea. If you don't want to get out of positions, I have some positions that I have that I like PayPal, that keeps dropping. It looks like PayPal may visit a low, right? Let's take a look. PayPal keeps getting dropped and dropped and dropped, down 4%, 5.34 points. Yeah, let me switch the screen so you can look at the more refined. Let's look at PayPal here. I mean, there's a daily. You can see it's just straight down. We may have found a low, maybe switching back. You can't really see it there on the Traders MACD. RSI is really down in the dumps. It's like oversold basically, and so if we get below this number, this 105.20, then we, you know, 104.99, then it looks like we may see further downturn. It's tough to do that, right? Because gosh, there's not a lot of volume during this time period that we're seeing. So in that area. So I mean, really, it could go down a little bit more, but the upside is nice. So I'm a believer in PayPal. You know, but we may have to be patient with them. Palantir. Wow. Haven't taken the time to look at it. What the earnings said. So I'm at a loss for words for there, but I just did see the reaction. I like what they're doing. I like the idea of what they're pursuing. I get it. I know where this might be going, but the price action right now is I mean really hurting. 1177 after hours 1180. So anyway, the other big mover we mentioned that earlier was Nvidia. Like I said, just positive numbers throughout. It really lost at this point. So we're below this volume profile. We will probably visit here this 230 number, 232 number. I'm very bullish on Nvidia over the next 5 years. So you can see that where this volume profile, it needs to hold here. It needs to hold here. If not, it has to ride that roller coaster down to the next fib line and more like this volume peak right here. So at 224, 223 or so. But if that happens, you know, it's like, and you're holding and you're okay holding and taking those losses and you have thick skin, then you just average down, right? And obviously as a trader, that's really hard to do because you're trying to make money fast. But you know, a portion of your portfolio should be for longer term plays, and your skin's got to be thicker. And sometimes you have to look at, you know, longer term ideas, right? Look at the weekly numbers. You can see, right? Like this is where that big volume is, right? 131. That's really low. But look, on the weekly chart, we get to 29 and below that, you know, you're sliding down. So we should have an easier time to get down here. So again, you can sell calls to make up some of those losses. Everything is difficult. So anyway, I hope that helps. I know I'm not offering tons as far as the short term, but long term, keep it focused, right? Which is like there's plenty of liquidity in the economy. There's work. There's a lot going on. This inflation is eating up our wealth. I had a really good friend, PhD guy. He's mentioning that he thinks we'll see deflation, right? So and so it's tough, you know. Everybody has their opinion. So I have my opinion, and one of those things that as a trader, you can't like have an agenda coming in, right? You just have kind of a plan. The plan is, hey, if I think this is happening, I'm going to execute this trade. And so what it is that you execute the trade, and then you have to have a stop loss, and then you have to have your targets, and you just play with that game over and over and over again. Eventually you catch a really nice trade and you make up some of the losses. So I was fortunate, played oil down, so I did a nice oil trade, but those are tough, right? Because they're so leveraged using oil futures, as you can see. But the CL trade is a good one there. But just wanted to give you a little bit the definition of deflation: a persistent decrease in the level of consumer prices, or a persistent increase in the purchasing power of money. So I don't think so, but he has this idea that that's the case. So I haven't investigated that possibility. I really see that everything in the world acting through bonds. And so let's take a quick look at what bonds are doing. Bonds rose. You can see U.S. Treasury bond futures, 1.07. Let's take a look at what TLT did. You can see it there. You can see ZB, the futures market. Let's take a look at TLT. You can see that it had a little brief jump right here, 0.74%. So one thing to note is that this goes up or down depending on interest rates. If interest rates rise, then this will down. If interest rates drop, this will go up. But the other component everybody forgets is demand. Doesn't matter if interest rates are going down if the demand is really high. If there's enough demand and the interest rates are going down at a certain rate, this can still go up in price. And so obviously when you get the double whammy is when you get the super high numbers. And just so you can see how that has happened in the past. Let's take a look here. Pandemic levels. You should always exercise 174, right? Always use bonds to gauge where we are. Anyway, join us at optionstradingpilot.com. Like us, subscribe. We'll be sending out more content more regularly. The last week and a half has been a crazy time, and so we've been busy on our Discord site. So join us, and we'll give you the information when you need it. Talk to you guys soon. Bye.